All right, traders, it is time to do an in-depth price action analysis on the stock market. We are going to be reviewing the SPY, and we are also going to be going over the following stocks: Triple BY, Snapchat, Amazon, Tesla, Robinhood, Kohl's, Facebook, Lucid, Disney, Affirm, NVDA, Apple, SOFI, Ford, AMC, and Target. So make sure you stay to the end of this video because I'm going to be covering when to be bearish, when to buy the put options, and when to be bullish, when to buy the call options. We're going to be going over the key price levels, and this is going to give you a much better understanding on what trades to be making this week. So in terms of my current micro and macro points of view on the stock market I am currently bearish for this week. And then in terms of the macro, I'm very bearish as well. So let's kind of get into the in-depth price action analysis and do the important update, in terms of SPY. So first things first, huge shout out to those of you who've been making money on the past 2 days, on Thursday and on Friday with the put options. And for those of you who were patient, and it does look like February 18th puts are still on track to print. So with that being said, here's where I think we're at in terms of the micro price action for the SPY. So SPY, as you know, ended up cracking the key 457 level support. Once it did, it quickly dropped all the way to the low 420s. Then it shot back up. And this right here was your macro confirmations that it was turning that previous support level right here, this red line with this nice bottom wick with huge upside for potential new all-time highs, into now a resistance level, which means the bears are still in control as there was 3 failed attempts to break above that key support level and turn into support. The bears are still in control, and we are really on track to really start to see some red heading into this week. I mean, if you look at what happened previously when it struggled at this level back here, it crashed all the way down to $421, right? So with that being said, in terms of this overall chart, since we have the gap close reversal and we have the major resistance, we have the triple top, the triple fake out right towards this key 457. One thing that I wanted to point out is as well, this is so bearish. This is so bearish that it has already cracked this 440, previous support level. Remember how this 440 right here, previous resistance of this channel, the high of this channel right here, it turned into support. And then as soon as that happened, it had a nice micro move up to fill this gap at 457, right? Remember that? Well, now that this key 440 support level, previous resistance, but now it's reacting as resistance level, is now back into a resistance level. Instead of seeing a nice micro move up, we should see a nice micro move to the downside. So last time it bottomed out at 444, it shot up to like $458, right? So with that being said, we can potentially see easily a downside to at least this week, by the end of this week, like $427. We can definitely see 427 to 429 by Friday. That's kind of my views on the overall SPY. So basically, you guys know I've been, bearish for the macro overall on SPY, but in terms of the micro, the key for the bears heading into this week is all they have to do is just maintain this 444 as a resistance level. If they can just continue to maintain 444 into a resistance level, we're going to be on track for $427 to $429 by Friday. Now, with that being said, there could be a small little micro spike. And if that does occur early this week, I think if it does occur, it's going to be more earlier than this week than towards the end of the week. I think that hard sell be more towards the end of the week. But if we do see some sort of micro spike, I think it's going to be a fake out overall. And if you see 444 react as a resistance level, that's going to be a great confirmation to short. But either way, February 18th put options should be doing fairly well. I do believe the market is due for that nice pullback back into the 430 to 427 range by Friday, right? And I think these micro spikes, if we get any micro spikes, I personally think they're going to be fake outs into this week. So in terms of another thing I want you to understand is the SPY closed at $440.46. So for those of you who are wondering in terms of like day trades, like what are the current best prices to short these stocks? The previous closing prices. If you see them gap down tomorrow, they open up lower than they previously closed, right? So these are going to be the previous closing prices right here where they closed out on Friday. If you see them open up lower, wait for them to go back to the previous closing price. And then once they go back to that price, if you see the bearish confirmations come in, it's struggling, it's reacting as a resistance level, then you're going to want to look to grab some put options and play it for the gap close reversal. So basically what I'm telling you is, in terms of put options this week, I know some of you guys are in swing trades, but in terms of like day trades, when they gap down like this is a massive gap down, wait for them to go back up and touch that previous closing price, right? This line, the PCP indicator. Once you see it react as a resistance level there, then you're going to want to look to grab some puts for a nice day trading opportunity. So that's what I want you to focus on heading into this week. If they do gap down, to wait for them to go back to the previous closing price and then play that micro macro trend where SPY sells off, give yourself some time in the contracts, right? But that's where I think we're at on the SPY, right? So we could see some little micro spike, but once this 444 continues to react as a resistance, we're going to be on track by the end of Friday. If that 444 could stand to resistance, we'll be on track to go to 427 to 430. Now, if 444 starts reacting as a support level and we see a bullish green candle come in on the SPY's daily, we'll be on track for a run up to about 451.50. I personally don't think, I don't see the SPY going higher than 451 this week. I think it's going to be a very, very red week overall, especially towards the end of the week. But we could see some little micro spike if 444 reacts as the support. It's going to try to spike back to about 450. Those would be the key best levels to short. Previous closing prices, 444 and 450. I'm extremely bearish, extremely short biased on the SPY. Let's get into the stocks now. So let's start off with triple BY. So Bed Bath & Beyond, this is going to fade hard. I think within some time. So I would give yourself 2 to 4 weeks on these contracts if you want, even a little bit more. But I think this is setting up for a great swing trade where this goes back to about $13.50. That's where I think we're heading. Chart turned very, very bearish, had a nice gap close reversal here when it filled the gap at 1703. And once it cracks this key support level at 1550, you're going to see a nice red day into the low 14s. But within, I would say 2 to 3 weeks, I personally think this is going to have a hard sell off along with a lot of other stocks. And I think it's going to drop to 1350s. So keep those on your radar. Snapchat. Best price to short Snapchat would be to wait for the gap to fill. Once this fills the gap at 42.73, so set your price alerts. I got mine set. Look for it to turn into resistance. If you see it form a bearish candlestick on the daily, then it's a swing trade. But overall, Snapchat should have a nice gap close reversal and it should start to get crushed once it's towards that level. Just use confirmation, right? If it goes above 42.73, that's bullish and it's going to start to run to like 44. Overall, I'm bearish on Snapchat. I'm just kind of waiting for that best price, but it does look like we're going to start seeing some downside coming here within some time as it's struggling to break out towards this level. But the best thing to do is to wait for that gap to fill. Amazon looks so bearish. You know, same move as SPY where you're going to see this pattern a lot. They all cracked their key support levels. The key support level was right here. Massive sell-off and then a quick pump back, turning previous support now into resistance. Amazon is so bearish. I think within the next, 3 to 4 weeks, this is going to hit 2,775. So you guys use this price action, you use this analysis how you want to use it. There's a lot of great macro opportunities coming up for puts, in my opinion, and you can use whatever strategy you want to use on it. There's a lot of advanced options trading strategies where you can use these price targets that I'm giving you. So like, for example, I think Amazon's going to go to, 2750 within 2 to 4 weeks. So you can use that price targets. You can use the price action analysis to the strategies that you're using to do very, very well within the market. Because I'm telling you, these videos, these price targets, they tend to hit. Like the price targets tend to be very, very spot on. So I'm extremely short biased in terms of Amazon for the whole micro macro move here. There is a gap to fill right here towards $3,000. So if that reacts as a support, it's going to see a little pump back. But once that breaks down and reacts as a resistance level, it's going to be a hard sell off, great key breakdown to short. Tesla. Remember how I told you guys Tesla was going to fill this gap? Well, the gap has filled. There's so many things you could have done with options. You could have done a vertical put. Like there's a lot of different strategies you could do with these. So now that the gap has filled on Tesla, the key level that I want you to understand is going to be 846. It actually hasn't filled yet. It almost filled. So 846 is going to be your key level. You could see a micro buying opportunity where you scalp it, get in, get out. If you see a nice bounce confirmation, a bullish confirmation at 846, once this gap fills, you're going to want to buy Tesla. Now, that's just a short-term trade. Overall macro is still bearish. In terms of macro, once you see this crack 846, and say it forms a red bearish candlestick at 846, right? It closes around the day, it looks bearish. You're going to want to be in a swing trade for puts. Once 846 cracks and reacts as a resistance level, this is going to be on track to go to $790. So keep that in mind. Overall, very, very, bearish from this macro point of view right now. We could see a small little micro bounce, but just understand that's just a quick scalp in and out at that 846 level. Once that cracks some resistance, you're going to want to be in some puts for the key breakdown. Robinhood is setting up for another sell-off in terms of where I think we're at. I think it's going to be something like this, where we're just kind of sitting and we're just kind of sitting, and then we just fade, and then we just fade. I think that's going to happen with a lot of stocks within the next like 2 to 4 weeks overall. Especially some downside this week, in my opinion. So again, look into some midterm plays, like for put options, especially like a Robinhood would be another one. I could see this easily going back to 1150 within the next 2 to 3 weeks. Coles could be another one as well. Within some time, this will definitely go back to like $55 for a nice breakdown. In terms of Facebook is getting fairly interesting, right? So in terms of Facebook, there's a gap to fill at $220.18. It has filled the gap. It's already selling off. If Facebook cracks this, I would say 220 level, which it already has. If you see, Facebook struggling at resistance at 219.55 to 220 around there, you're going to want to grab some puts on Facebook, as it should go to 216. If 216 cracks, then you're looking at a sell-off to around, let's see. You're looking at a hard sell-off to around $204 to $205. Facebook is currently looking very, very bearish, so keep that on the radar. In terms of Lucid, keep Lucid on your radar. I've been telling you guys this gap is just destined to fill within some time. These gaps are going to fill. There's a lot of gaps to fill below on Lucid. There's one right here at $24. There's another one right here all the way down at $18 within some time. This is really going to get crushed and fill these gaps. So in terms of Lucid, I want you to focus on, once again, the key breakdown. The key breakdown is going to be at 25.63. Once you see this stock crack 25.63 and reacts as resistance, you're going to want to be in on some puts for that particular situation. In terms of how low can it go for the micro if it cracks 25.60. Looking at the chart, you're looking at a nice move to about $24.11. There's a gap to fill at $24.11. So the plan Lucid is to play for the key breakdown puts. When you see 25.63 crack, buy the puts, ride this back down to fill the gap below at 24.11. Once it hits 24.11, that's when you can see a micro bounce for a quick micro scalping call opportunity if it looks bullish, right? So that's my thoughts on Lucid. Very, very bearish from the overall macro. Think it's going much lower within the next 2 to 4 weeks. Going to take some hits. So just keep that in mind, guys. I would definitely, really start looking into more macro puts and give them some time, like 2 to 4 weeks at least. In terms of Disney's getting a little interesting. Had a nice little gap close reversal here. It looks like it's going to be on track to fill this gap at 147.23. If it cracks that, within some time, it's going to drop to 142.60. If it holds and bounces, I wouldn't do anything with it. Overall, I'm kind of bearish on Disney right now. I think it's going to fill this gap. Once it cracks and fills that gap, then it's going to start to fill this gap. In terms of Affirm, keep this on your radar for a new breakdown. So Affirm is currently sitting at all-time lows. If it reacts at this key level, we're going to call 48.50 and 48, so 48 to 48.50. If that reacts as a resistance level and you see that starting to crack, you see that starting to break down, you're going to want to do a micro key breakdown opportunity for Affirm for a nice little quick scalp, right? So keep that in mind for the new all-time lows. In terms of resistance to focus on, If this bounces back to 58.68 at some point and you see it reacting as a resistance level, you see it forming a bearish candlestick on the daily towards the end of the day, you're going to want to grab some puts as well. So those are the two key levels to look for puts on Affirm stock. NVDA is currently sitting, so you can see right here, very similar move with the SPY. Your key support was here. It bounced back, turned it into resistance. So in terms of NVIDIA, we're going to be on track for a gap fill play right here to $228. So I think we're going to go to 228 by the end of this week. So you can look into NVIDIA puts as well. There's a lot of things you can do with the options as well. It doesn't just have to be naked call or put. But yeah, if you see this react, once you see this react as 240, 239.50, see that react as resistance, you're going to want to grab some puts, ride that back down to fill the gap below. Apple is looking extremely bearish. In terms of where we're kind of at on this whole Apple situation, I think within some time, within like the next two to 3 weeks, maybe 4 weeks, we're going to fill this gap. There's a gap to fill at 159.22. That's where you're going to want to look to scalp the call options. See how there was a gap right here to fill at 56.81. It fills the gap, it forms the bullish confirmation, then it rockets up. So look for that to happen when it fills the gap. For now, ride this back down to fill this gap below. The absolute best price in terms of resistance would be the closing price at 168.64. That's the second best. The first best would be right here at 175.94 for the gap close reversal at key resistance. Overall, though, Apple is looking very, very bearish. Within the next 2 to 4 weeks, I could see this dropping to $159, right? So in terms of SOFI is setting up for another very bearish move. You can see this key support right here with this huge upside bottom wick potential was formed at $13.14. You could also see a lot of key support right here in the 1360s. Well, that is now confirmed bin resistance for the past 2.5 weeks, right? So this is on track to really break down within some time. So this is another one I would consider puts on. For the micro, we're definitely heading to 12.13. Once 12.13 cracks, then we're going to see a very nice pullback into the lower 11s, 11.30 range. Overall, this is very, very bearish from the micro and macro, along with other stocks right now in the market. In terms of Ford is looking very, very bearish. I still have some macro March 18th puts, still holding 1/3 of that position that I did very well on. I literally bought those puts right here when it was sitting in the 24.50s. But yeah, in terms of Ford, if you see this react, this 1772 to 1755, you see that react as a resistance level, it's looking bearish. You're going to want to grab some puts. It should quickly crash to 1690. And then in terms of like the macro within the next like 2 to 3 weeks, we should see a gap fill play, which is why I'm still holding some of my macro puts at 1551, which would be one of the best prices to buy some micro calls at 1551. But yeah, I personally think this stock is going to fill this gap at 1551 within the next 2 to 4 weeks. So great macro put opportunity as well. I've been holding those since the stock was trading in the 24s. I'm up over 100% on that position still. In terms of AMC, I think AMC is setting up for another short, another put opportunity. You can see right here, you had this gap fill right here. There was a gap to fill at 2057. AMC loves filling those gaps. It filled the gap. Now it's having a reversal. It was also previous heavy support, now reacting as a resistance. So see your support right here at $20.50, 2050 gap fill level right here. Well, it cracked that support and it had a big pullback into the low 13s. It rips back up. Previous support now has turned into resistance on AMC, like we saw with the SPY and all other stocks. That's a very bearish macro confirmation there. So I think AMC is setting up for a put opportunity where if you give this one some time, it should do well within the next like 2 to 4 weeks. So yeah, overall, what I want you to understand about AMC right now is your key support, your key level is going to be this 1850, 1860 level. Once that cracks and turns into resistance, it's really going to be on track for a nice sell-off within some time to like your mid to your lower 16s within some time. But yeah, I just think we're setting up for another bull trap on AMC. It wasn't too long ago. This was at $13.40. It recently had one of its best months in a while, one of its best weeks in a while. And I just think that's simply, turning previous support right here into resistance. And that's a very bearish macro confirmation that we're going to be heading back down. So I think it's going to be a very smart move to get some AMC puts and kind of ride those out for the next 2 to 4 weeks. So that's my thoughts on that. In terms of target, look for the key breakdowns. The key breakdown on target is going to be all of this support right here. Your key support is going to be at 210.40. Once 210.40 cracks, we should see a nice little micro crash, a nice little scalping opportunity for those puts as its key heavy support. So look for the key breakdown. It should be breaking down within some time. If you look at the chart, it's forming new lower highs, very, very bearish. It keeps trying to break down. So pay attention to that key breakdown opportunity for target puts. But yeah, guys, I'm telling you, those opportunities, I saved, some of the best ones till the end. Those should do very, very well. If you're playing it smart, you'll understand, you got to be patient with these. There's some nice little scalps in there. And then there's also a lot of great swing trading opportunities as well. But these should do fairly well, guys. From this analysis, you should do fairly well with these options and with these trading and with the contracts. So let me know what you think. Let me know how it turns out for you within some time. I appreciate you guys who are, subscribed and active within the channel. For those of you within Trader Society, I will see you tomorrow live at Market Open for the live trading session, guys. Let's crush it. I'm telling you guys, the market is just looking very, very bearish from a macro. We got the macro confirmations we needed. I think within some time, all these stocks that I mentioned are really just going to really start to drop and come back down to those price targets I mentioned. But yeah, that's kind of where we're at in terms of the market, and I will see you guys tomorrow live at Market Open. For those of you within Trader Society, thank you so much for watching this video, and I'll see you in the next one.